Realty Income stock, ticker symbol O, the famous monthly dividend paying stock. This company just released earnings and it is looking really interesting. FFO was reported a little over $1, beating analysis estimations, and revenue was reported at $1.26 billion, up 33% year over year, and also beating analysis estimations. This looks pretty impressive to me. But people love Realty Income stock because of multiple reasons, one of the main things being the dividend, and I understand why with dividend yield at 5.6%, and of course the monthly payouts. If we look at the past 5 years, we see that Realty Income underperforms the S&P 500 big time, and keep in mind this is including dividends. So, could this be the perfect time to buy Realty Income stock? Well, by the end of the video I will give you my 3 price targets, so make sure to watch until the end and see how I build up to these price targets. I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does Realty Income do? Realty Income focuses on acquiring freestanding single-unit properties leased to industry-leading operators under long-term net lease agreements. Diving into the earnings, we see that net income per share was reported at $0.16. Nothing too exciting. But one of the most important numbers, AFFO, was reported at $1.03, looking pretty solid to me. Another important number, the net debt to EBITDA, is at 5.5, which is a great number. I prefer a range of 5 to 6.5 here. Looking at the year-over-year numbers, we see that revenue increased 33%, which is insane of course. Net income per share decreased quite a lot, which is something to keep your eye on, of course. It's the same with FFO per share, but down the line AFFO looks pretty solid. Looking at the 2024 outlook, we see that net income per share is expected to be a tiny bit higher versus the prior guidance for 2024. But FFO and AFFO are expected to be still in the same range as the previous guidance. Occupancy rate also looks really good to me at 98%, and acquisition volume is expected to be around $2 billion. Going back to the net income, where we saw a decline, this is related to the merger and integration cost with Spirit Realty earlier this year. And now that we know a bit more about the company, it's time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. Realty Income is a $39 billion market cap company. PE ratio is not a fair metric to use with REITs, so I'll be using the price to FFO instead. Right now it is sitting at almost 13.2, indicating they might be undervalued. Later in this video I will show you my 3 price targets for Realty Income stock, so make sure to watch until the end, because price to FFO is only telling a small part of the full story here. Revenue is at $4 billion, and in this graph we see that revenue went up in the long run. It has to be said that for a REIT it is growing really steady and consistent. In the past couple of years revenue really skyrocketed, also due to some acquisitions. We see that margins are going down over a longer period of time, and this is of course something that worries me a lot, especially since 2020 the margins look not that great. EPS is showing similar trends as the margin in revenue. For a REIT it looks pretty decent. Analysts expect that from here EPS gradually increases to $1.7 in 2027. And we see mid-single digit growth per year on average. For the revenue it is also looking very interesting, with an estimate of $5.36 billion in 2025, and growth numbers are fluctuating a lot. Return on assets is sitting at 1.5%, which is a low number for a REIT. Return on equity is also looking a bit low. And the most important number, return on invested capital, is sitting at 1.94%, which is a low number, even for a REIT. It is also lower versus the 5-year average, so that doesn't look good either. Current ratio is at 1.28, which is a decent number for a REIT. Nothing special to mention here. Historically, it looked pretty good to me. Right now, Realty Income has 22 billion in debt, and I prefer companies that can pay down at least a big chunk of their total debt with the total cash. Realty Income has 232 million in total cash, so they can't pay down a big chunk of their total debt. This is something that I don't like. So it is very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run, which is a great thing. Shares outstanding are increasing, which is very common for a REIT, since they increase shares to raise capital. But when shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio, and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 5.7%, which is a great number. And keep in mind that Realty Income pays a monthly dividend instead of a quarterly dividend. Annual payout is a little bit over $3 and payout ratio is around 74%, which is below the 75% average for REITs. The 5-year growth rate is at 3.6%, which is a decent number. On top of that, they increased the dividends for 26 years in a row, which is really nice. And here we see the dividends paid since 2012, and this looks really good to me. Realty Income really likes to increase the dividends at a low rate, but over a longer period of time this really adds up. In this graph we see the expected dividends in 2024, 2025 and 2026. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to grow at the historical rate from here. And overall these dividends look pretty good to me, but how about the historical returns? I decided to compare Realty Income stock with the overall market, in this case the S&P 500. Next to that I added ADC and NNN. On the 5-year chart we see that Realty Income only returned 1% and this is including dividends. The S&P 500 returned 89%, massively outperforming all stocks in this list. On the 1-year chart it looks pretty interesting, with the S&P 500 again beating all stocks in this list. The 3 REITs are all having significant lower returns. On the 6-month chart it is again the S&P 500 that is having the highest return with 22%. But this time both Realty Income and NNN came really close. On the 1-month chart it is both Realty Income and ADC that are having the highest return here. So bottom line, the S&P 500 was by far the better investment in the past 5 years. But with the stock being hammered down a lot, it could be a great potential investment. So, could this be the perfect time to buy a Realty Income stock? Well, let's check the 3 price targets that are created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets. For the revenue growth I'm filling in 8, 10 and 12%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm filling in 21, 22 and 23%. And for the free cash flow margin I'm putting in 70, 72 and 74%. For the PE ratio I'm putting in 20 since it is a REIT. And for the price to free cash flow I'm putting in 12, 13 and 14. My desired annual return is 15% since I can get an easy 10% average annual return with owning an ETF. Usually I put in 12.5%, but I want to build in a higher margin of safety here. And right now Realty Income stock is around $55. I hit analyze and we see a few green numbers. We have a low price target of $51. We have a mid price target of $63 and we have a high price target of $77. And to me, the mid price target is the most justified here, indicating this stock is undervalued. Please let me know the price target that you think is the most justified in the comments down below. My final conclusion on Realty Income is that it is an amazing company. They have a long proven track record and most fundamentals do look good. Dividends are also pretty attractive with the current yield and of course the monthly payouts. From a valuation point of view, things also look pretty good, as most REITs are pushed down a lot lately. For now, I keep buying Realty Income at these prices, since it is such a great deal to me. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.